All right, I'd like to welcome everyone to the Market View commentary for Monday, March 11th. Let's get moving forward. Let's make sure everyone's there. Everyone can hear me. We can see my screen. And let's get moving. I will tell you tonight, I'm going to promise you two things. I'm going to work on being as politically correct as possible. And if you're going to listen to my podcast tonight, I guess my other chat session tonight in regards to trade findings and adjustments, I may not be so politically correct in that one, but I will find a good trade for you. All right, what happened today? What changed our markets? Geez, that's awful. That's not what I'm looking for. What changed our markets today? What's in there? Everyone was getting too bearish. Great comment. In fact, Maud and Mary, both of you just said the same thing in different words. Maud beat you, Mary. How was the market getting too bearish? Please describe that to me on what happened to our markets to cause it the upswing that we saw in it today. And then I'm going to come back on how markets get too bearish, but that's exactly in line with what I was thinking of today. Let's see if you two gals are going to mention what I want to mention. And I am getting another screenshot here. Retail sales down. A lot of talk about May recession coming. Everyone's getting bearish into the bull market for 10 years. We had better than expected economic reports. We had a better than expected upgrade. And then, of course, Lance, Apple is up. So that's not quite what I was expecting, but all of you are 100% correct. What causes this bear market, though? That's what I guess I'm trying to say. What caused us to be overly bearish? So let me go ahead and put it that way. What caused our markets to be overly bearish? No China deal, but we do have a China deal going on. President Trump, ouch. Good comment, Tony. We did have an inevitable bull market for run after 10 years, so it could be a cycle. Democrats ruining our country. That was said, not by me. I will not voice who said that. Can I maybe put it into a little different commentary? Wasn't our market going through headline risk? Would that be fair to say that our markets basically went through some headline risk? Is that fair? Yes, no, maybe so. I just saw 4 yeses pop up really quickly. So if we want to say it was headline risk, let me ask you one other question then. If we're going to call it headline risk, how would I say this? If it's headline risk, why is the VIX down so low? And I'm just going to say in general, right? I think I've got it figured out. And it's funny that we're having this conversation because this was my worry. This is my commentary. A lot of put buying for protection, but that would spike the VIX by having the put call ratio get to more puts, more worry. That was a good answer. Good comment. The VIX is still historically high. That is also true. But since 2008, a high VIX is really in the 20s. To have it down, and let's take a peek at where it's at right now to make sure we get the understanding I'm trying to give you here. Because I thought, it's just headline risk. It's just headline risk. We've dealt with headline risk, but we've had lower volumes. We've gone through a 36, and I was going to say I consider higher volatility right now to be in that 20 to 25 range, spiking at 28.84, 27.86, 25.94, 36.20 in December there. Lower volumes. Look at how our volumes are. Where's my volume, for crying out loud? I don't have volume here. Where's my volume at? 50.1% are. Guess it doesn't show my volume on the volatility index. That's because I really want to show volumes on the Dow. Kind of been lower volume. Kind of looking at volume in September-ish. To maybe make it a little bit better, let's run to the S&P 500. And let's take this out to a year and a half. And this is general. But I also see some lower volume. Although that kind of goes against what I'm saying, but not really. Lower spikes, lower general volume. So I guess I'm not doing a good job of describing this, but why is the VIX so low in general? Are we really taking headline risk? I think it's complacency. I think it's complacency, and I think that is what we're seeing in our market right now. Complacency where, yes, we're still technically bullish again. No, we're technically still bearish. Sorry, haven't got our crossovers. We are still technically bearish, but no one wants to miss the opportunity on the Dow 30. S&P, still technically bearish now. Looking at the MACD there, right? Could be moving a nice uptrend to get that golden cross. And then on the NASDAQ, we're also still technically bearish. But I might, how would I say this? I feel like since last December, we've had some violent moves, both to the upside and the downside. We're retaking the 200-day simple moving average on the NASDAQ. On the S&P, we held the 200-day. On the Dow, we used it as support. But we have this complacency. So let me ask you this question. Where will our markets be in 2020? Or maybe 2021? Right now, the S&P is sitting at 2783. That's where we closed. Couldn't get above 200. Kind of smacked us down at 2800, excuse me. So we're at 2783. Where will our markets be in 2020, 2021? Interesting two comments here. No one knows, but it's time for a pullback by then. Kevin will go through a big bear market turn. And if I can make the comment there, Tony, and put a little couple words in your mouth. Will we finally go through a recessionary, or will it be a correction, or will it be a bear market? Because those are three different things, right? A recessionary market can be in the 30% down. A bear market's 20 plus. Is it just a couple corrections where we have 10% twice in a year? What are the thoughts? How are we going to make this work? How's it going to happen? A comment was just made in here, corporate debt. I actually think the election, I think if we see some of the election change, it's going to be shocking. And the reason why I think it's going to be shocking comes down to, I got this from Bloomberg, and I'm not going to pick on the Democrats here, but how they want to tax the rich proposals scares me. Levy a 5%, 0.5% tax on all stock trades and 1% on bond trades. Tax paid by rolling back through some tax cuts. Affects me as an LLC. I kind of don't mind this one, but that's only because I'm not at $50 million yet. I do mind this one right here. Tax on states that have a value above 3.5 million. I might get there in a day. Someday when I die, that might be above where I'm going to be at. Some other prominent Democrat hopefuls. Scares me. 70% tax on income over 10 million. What scares me above that is once you get to that income, and that's not taxable income, that's income. That's gross, not net after so forth. I know I wouldn't want to work to make me any dollar above 10 million if I was going to get taxed 70% on it. Make maximum marginal tax rate 90%. You got to be kidding me. They have a 0.1% tax on all financial trades. And these are trades. That's in and out. I've got a bunch of information here on different things that it comes up to, and it scares me. Taxing banks. Think we have a hard time getting lending right now? That would be awful. It just, I'm going to let you read it. I'm going to let you read it, but here is the comment that I'm going to make. The comment is, sometime, somewhere, in the future, our stock market correction will have to include the stimulus, the tax breaks, the quantitative easing, the Fed huge balance sheet, the Band-Aids placed into law, and I'm not saying that Dodd-Frank wasn't good in some respects, but Dodd-Frank, for all intents and purposes, did nothing to help us out. It caused me 16 more hours of work a month, but it did nothing to help us out. So I want to be able to collar trade. Cooler, I like that one. Good thing I'm not judged on my spelling, right? Pick up or double my share count and create monthly income through the strangle straddle. When things started to get wild there at the end of last year, I told you I was just testing, and I didn't do anything in November, but through December, 3 for 3 on some strangles, no straddles, strangles on all of them, out of the money strangles that, made some good return. I don't try to go any more than $5,000 on them. And I was just testing to see if I could start trying to convince people to come back into them. But the neat thing is, if you can collar trade, and if you can understand a strangle straddle, you don't have to be fearful of our next stock market crash. And it's only, to let you know, about 6 years overdue. Our next crash, it seems to have every, 4.4 years on average. 2008, 2000, 97, 94, 93, 90, 87, 83. I can keep going on back. In fact, that would go back to that spreadsheet that we had that you had an opportunity to download a couple weeks ago. You guys have the solution to be profitable in our next stock market crash that will probably be the worst of all time. We almost went to negative interest rates to force the banks to push money out. They were almost going to lose money by sitting it at the Fed. Two of you made the question, can the next stock market correction be worse than 2008? So does that make the correction worse than 2008? Mary and Maud, you guys are both on the same line of thought there. Definitely. It can be much worse. Another comment that I missed. Don't forget the Russia, China, and the Norks. Threats coming from Russian military and cyber missiles from China and their desire for taking back non-communal China, which I think is taking back, the island. I'm brain farting it right now. I don't think we can exclude those external factors. Correct. It's not Singapore, is it? Anyway, let me just get back on track here. That's going to bug me, though, until I remember it. Our next crash can be very worrisome. Taiwan, that's probably it. It is Taiwan. They speak Mandarin Chinese in Taiwan, right? Little island dot cross. Anyone can chime in. Me and someone else aren't really sure, so we're just blabbing stuff out there. The short answer is we're in trouble. We are in trouble. And some of the new loans that are going out, are an 8-year fix, because a short-term 2 to 4 year arm will be better if it's an 8-year arm. Yeah, they've got to qualify. They've got to have good income to do it. Yet, for crying out loud, I can't get I had a devil of a time getting my home refinanced. And it was about 50% loan to value. My refinance, my home was double the value of the loan that I wanted on it. It can be really scary as you look at it from a historical point of view. But again, if you can collar trade, or if you're willing to do some strangle straddles, you're in great shape when it really hits the fan. And the neat thing is, it just comes down to adding one extra long put contract as you fall through a support level, and the gates open up for you to make some great money. If you ask me where our markets are going to end this week, because of the headlines, the Apple, the Disney, the Captain Marvel making like $455 million worldwide, almost double overseas what it made here in the U.S. I see some nice upside for the next couple of weeks in our stock market. I think it's only the next couple of weeks as people start to sell off towards the end of March to have some profit to pay the taxes that are going to be due. If you ask me where I think we're going to end the month, I still have to tell you, I think we're going to be pretty flat. I think we're going to be pretty flat because as I look at where we're at, I think we're stuck between breaking above 2,800 and our 200-day simple moving average. I don't think the China deal is going to come before people want to sell off in April. And I think because it's going to take longer than the end of March, we'll probably see things go down and test the 2680, test the 50-day before we bounce back with some tax returns in April. So I'm going to tell you right now, 0%. Nothing moves our needle. Nothing moves our needle this week on earnings. I don't think someone like a Dick's Sporting Goods on Tuesday is going to move the needle. Express or Del Taco or Taco Bell, I can't remember which one's Taco. On Wednesday, ADT today, not going to move the bill. Dollar General, Adobe, Jabil, not Tilly's. Can't remember what the other one is. DocuSign, not going to move the needle. Buckle, Kirkland, not going to move the needle. It won't be earnings that move us higher this week. It'll be headlines. Economic reports, pretty amazing for business inventories to come in at a 0.6 and match the estimates of 0.6. But retail sales came in at 0.2 instead of down a negative 0.1. And retail without autos came in at a 0.9 instead of a 0.2. Fabulous retail numbers. The question is, was that people just getting back to buying things when so much of the government workers were out of work December through January? You know what? I should do that. Maud said I should put on a how to handle market crash. I should do that. I should do that and tape it and record it. Go back and pull some of my 2008 stuff to give you guys some ideas on how to do that. Thank you. In fact, that'll be something I'll probably just put together and email out to you, and then I'll go sell it to other people online. How does that sound? Give it to you guys for free, present it to you guys, have you guys make comments, and then bring that in. I really didn't look. Crying out loud, Hurley. I really didn't look internationally. So let's take a quick look internationally. I've been a little bit behind the 8 ball today. Let's take a look internationally. And why I didn't do this on Sunday, I don't know. I don't need a... Huh. All right, why is that not working? Really? Let's see if we can figure this out. For crying out loud. Well, all right, let's go to my other one. Monday. Machine orders, retail sales. Tuesday. China FDI won't mean anything. Great Britain won't mean anything. Japan has a bunch of stuff. Probably not going to mean anything there for us. Wednesday, durable goods, but nothing internationally. Brazil won't mean anything. Thursday. Oh, for crying out loud. Too much stuff is loading up there. I didn't see anything. There was nothing there that I saw that mattered. That was a big worry for me. So, with that said, how am I looking to trade? I'm really looking to trade short-term stock-only positions, short-term spread trades, get through monthly options expiration on this Friday, and add May, I should say, do a little differently, and add May options the end of March for tax / earnings protection. That is how I would be looking to adjust or move a portfolio right now. And you guys can't see it, but I'm trying to add one other link here. This is the positive side. Can the stock market keep rallying? These 206 indexes say they can. And I was going to try to maybe stay away from it. But no, Bill, I wasn't looking for that link. I was looking for the calendar link on Barron's. The question is, can our stock market bounce up to the 3,000 level? Are we going to follow the analysts on their expectation? Did it have a big enough of a pullback to be okay? And I don't know. I don't see. I would worry this year. I would worry this year on us pulling a last year, on us coming and saying, hey, we I don't know. I just see us giving back everything that we made this year at the end of the year again. I see that partially because some of what we have done last year was so shaky. And I'll be honest with you, I don't want to say I got caught by surprise, but it was, if we weren't already protected for some of the earnings that we had, it could have been a really rough end of the year where people lost their shorts. I already thought it was a rough year where 3 out of 4, 4 out of 5, 5 out of 7 stock positions or core positions got hit last year. It was difficult, to say the least. So you're gonna have to be careful. You're gonna have to spend some extra time being protected. It'll be a couple weeks till I get it done, but I do think the lesson on how you could add long puts on a webinar, or how I handled 2008, would be a great, hey, how to handle a crash in 2020 could be a very interesting title for a webinar. Any questions you guys have for me? Any questions? I've got some things I'm going to take here. I'm going to add two other two other news that I was reading. I'll add in here, so it'll be a little surprise for you as you look at it again. I didn't do the Bloomberg one yet. I'm trying to add that in here, where I have, I'm not sure how I'm going to add that in here. Where I get this one in here for the tax proposals. Any other questions you guys have? Kevin, is now a good time to go to cash? So, Tony, I know you and I think differently. You've got more of a day trading mentality than I do. If you go to cash, if you'd gone to cash on Friday, you would have missed the 200-point up day and 27 points up on the S&P today. Yeah, if you go to cash, you miss the up days. And I don't know how on a day-by-day basis or how you can predict the future. So if you can't predict the future, set something up that allows you to be able to make something up on the downside. Would a black swan event in the next couple of weeks bite me in the butt? It might. It really might. But that doesn't mean we can't get it to work. So the short answer is, I would never go to cash, because I'm not going to say I can predict the market or predict the future that well. I would call or trade. I'd never miss an up day in the market, and I would make some down days be an opportunity. And that doesn't mean you don't take some black swan risk where you maybe don't have protection on, but it's really easy to add if you need to. So there's my short comment there. Hopefully that answers it for you. Any other questions for me today? If not, you guys have an excellent evening. I will talk with you again next week. Keeve is going to take the Thursday trade findings and adjustments. So you can look on, so you'll get to meet Keeve on, you'll get to meet Keeve on Thursday. You guys have a wonderful evening. I will look forward to talking to you in the future. Have a good evening, and I'll talk to you then. Bye-bye.